One of the UK's biggest property companies has said today that property values had fallen by less than expected during the last 12 months. Grosvenor, the Duke of Westminster's property company, said values had fallen by 2.7% during 2023. That revaluation pushed it to a pre-tax loss of £175 million for the year, compared with a profit of £8.4 million in 2022. I've been speaking with Grosvenor's chief executive, Mark Preston.
The conditions last year were not terribly easy in the property sector, as you know, with interest rates going up, investor confidence coming down, valuations were written down in most parts of our portfolio. Actually, our own valuation decline was only about 2.5% across the board, which was quite mild, really, relative to the sector and the market as a whole. Perhaps I come back to explain why that is in a moment. But to your direct question, it was really the trading assets, the development assets in North America that were the ones that were hit most. That's where the losses came through, particularly in residential trading, and especially in San Francisco, where, as we're all aware, the market there has been very difficult, and that's principally responsible for the losses in the development side.
Overall, then, you've been quite surprised by the resilience of the valuations.
Definitely, and I think I perhaps wouldn't say surprised, in fact, because the quality of the portfolio, the strong underlying strength of revenues, we've got about very nearly a fully let portfolio, 95% let portfolio. So the underlying strength of revenues, the quality of the portfolio, and in particular also the emphasis we've been placing on environmental sustainability, energy efficient buildings, has meant that actually office demand in a sector that perhaps in some other parts of the world and some others of our peers has been a struggle, for us actually it hasn't, and we've been able to let those properties relatively well, and consequently the values have held up rather better for us than others. So actually resilient, I think, is the right word to describe.
Obviously, people know you best for your assets in the West End and in Belgravia. What are you seeing there in terms of letting activity? Are rents rising quite substantially?
Well, I think, take the office sector. There's a completely polarised sector now between well-located, but very much more importantly now well-specified buildings, which are not having difficulty finding tenants, and rents are rising, and they're quite strong and well ahead of what one might expect. And that's been our experience with our most recent letting, for example, at 65 Davies Street, which is a building right on top of the Elizabeth line. Very well located, very highly specified. But then on the other hand, one can go perhaps to a historically quite a strong location, but which doesn't have the right specification, and it's a struggle to get even a tenant interested, never mind increasing rents. So I think office sector is polarised. That's not just a UK phenomenon, worldwide. The retail sector, well, Grosvenor's retail, again, very high footfall locations, central London largely, other central cities, San Francisco, Vancouver and other markets, where we've found, again, tenant demand has been pretty strong. But I wouldn't suggest that's a retail-wide observation. Clearly, if one goes into the high streets that we spend our time walking up and down, it's a different story. Residential has continued to be quite strong. It's a sector we really like, and we're increasing our exposure to it, as I've talked to you before. Historically, we've always had a lot of residential in London, but not so much internationally. We're now increasing our exposure to residential quite a lot in North America, and largely at the expense, perhaps, of the office exposure.
You make clear that you're on course to hitting your targets as you try and decarbonise. When does investment in that particular activity peak?
Well, yes, a couple of years ago we set ourselves a science-based target to reduce emissions in line with a 1.5% increase in emissions globally, and that has really become a catalyst for an enormous range of different activity. We've now hit the 1 million square foot retrofitting target in the London portfolio, where we've retrofitted and created more energy efficient buildings. Last year, when I talked to you about this, we'd reduced carbon by 24% over the previous 2 years. With another year, we've now reduced it by 32% over 3 years. So we're well on our way to achieving a net zero target by 2040. And it's a steady investment over that period. We've already invested the 90 million I would have talked to you about last year in that retrofit programme. And what's really interesting is not only are we on a mission to decarbonise, but actually there's a very strong business case for it now too. And as I mentioned earlier on, the strength of our underlying revenues is at least partly thanks to demand from tenants who want to occupy these buildings. So I think for those who argue, as indeed I think they did somewhere else this morning, that net zero is becoming a problem for business, well, I would argue that there's a business case for it, provided one's strategic about it and you have a clear plan. And there's a lot of talk out there around targets with no real emphasis on how people are actually going to get there. And I think the time we've spent in investing in being clear about what our pathway is, what we're going to do, and as you rightly point out, the capital required to get us there, we're beginning to see that pay dividends.
You're also doing a lot more in terms of hybrid working and supporting tenants to reach that.
Correct. And we've probably what you're referring to quite rightly, Ian, is a decision that we've made to convert 20% of our office portfolio to what we call the flex office product, shorter term leases. And what's been interesting about that is, having tried it over the last 10 or 15 years 2 or 3 times and it not really getting going, it was somewhat successful. This time it has really flown, and we've got huge amounts of tenant demand for it, not only from those who one might expect to be attracted to it, partnerships and perhaps smaller businesses, early stage companies, but also big corporates who are also attracted to that more flexible offering, which of course doesn't tie them up and commit them to longer leases. So that's a trend that we are very focused on, and it's clearly a link to the hybrid working phenomenon that we've seen obviously since the pandemic.
You mentioned just now your residential activities. What are the big investment decisions that you're making there? What are the bets you're placing?
Well, I think principally we've got some very significant development activity in Vancouver, in North America. Canada is a market that's been, and particularly the West Coast, has been very strong, thanks principally to immigration. And so we've got some big projects that were underway in Vancouver. In the UK, we've recently been involved in quite a bit of lending to the residential sector. That's a new departure for Grosvenor. You wouldn't have heard me talk about that before. But it's occupying a niche that we think is quite attractive at a time when debt is not in long supply. It's quite challenging for people to find debt. And it's also a way of diversifying our income stream away from rents to other sources.
Just going to break into the business news. We have some new images to bring you from this morning's attack in East London, in which a 14-year-old boy died. These images show the alleged attacker brandishing a sword-like weapon before being confronted and tasered by police. That looks like the moment where he was tasered. We'll have more on that throughout the evening, of course, here on Sky News. Some other business news stories for you now. And Whitbread, the owner of the Premier Inn budget hotel chain, said today it will cut 1,500 jobs out of a total in the UK of 37,000. The job losses will come at Whitbread's branded restaurants, which include the Beefeater and Brewers Fayre names, as the company seeks to replace lower-performing sites adjacent to some of its hotels and replace them with integrated restaurants in the hotels themselves. The plan will also enable the opening of 3,500 new hotel rooms. Whitbread said staff affected would be offered alternative roles where possible, and stressed it's still hiring around 15,000 people annually. The news came as Whitbread announced a pre-tax profit of £452 million for the year to the end of February. That was up 21% on the same period last year. HSBC said today its chief executive, Noel Quinn, is to step down after nearly 5 years in the role. Mr Quinn, an accountant who first joined the old Midland Bank Group in 1987, succeeded John Flint in August 2019, but only on an interim basis for the first 7 months. The news came as Europe's biggest bank reported a pre-tax profit of $12.7 billion for the first 3 months of the year. That was down 2% on the same period last year, largely reflecting rising costs, including continued investment in technology and a higher wages bill. Howden Joinery said today it remains on track to open around 30 new depots in the UK, around 5 to 10 new international depots, and to refurbish around 85 of its older UK depots. The UK's largest specialist trade kitchen and joinery supplier said that so far this year it had opened 6 new UK depots, 1 in the Republic of Ireland, and had refurbished 10 older depots in the UK. It said sales during the first 16 weeks of the year were up 5.4% on the same period last year, due to both higher sales volumes and what it described as modest price increases. Hargreaves Lansdown said today it had seen a record number of clients contributing to their pensions during the tax year just ended. The UK's biggest investment platform said the average amount saved in pension products was up 22% year on year. The increased activity comes after the government abolished the cap on how much can be saved into a pension, a cap Labour has promised to reintroduce. Well, Hargreaves Lansdown also said it had seen an increase in share dealing volumes during the first 3 months of the year. It signed 34,000 new clients during the first 3 months of 2024, taking it to 1.858 million. Well, European stocks have ended the month on a downbeat note. Here's the picture in mainland Europe. All of the main continental European indices have finished April lower. Talking points today include the car maker Stellantis. The owner of Vauxhall is down nearly 9% in Milan following a profits warning, while car makers Mercedes-Benz and Volkswagen are both down 4% in Frankfurt. That follows trading updates from the pair. Well, here in London, the FTSE 100 hit another fresh intraday high earlier in the session. It's finished more or less unchanged, however, the FTSE showing a positive gain for April. In terms of the gainers, well, HSBC is among the leading blue chip gainers, up some 4% or so. That's after it announced plans to buy back $3 billion worth of its own shares. Close on its heels was Whitbread, up nearly 4%, as its results have been well received. To the downside, Prudential has fallen by some 5.5%, despite having reported an 11% rise in first quarter new business profits. Outside the FTSE, Hargreaves Lansdown is top of the pops, up 5.75%, following that better than expected trading update, while the utilities provider Telecom Plus has risen by 1.25% for similar reasons. Over on Wall Street, equities have opened to the downside. A lot of investors seem happy to sit on the sidelines ahead of tomorrow's interest rate decision from the US Federal Reserve. The conglomerate 3M is up by some 5% after its quarterly results came in better than expected, while the drugs giant Eli Lilly has risen by nearly 6% after it raised its sales forecasts. To the downside, the Brew and Molson Coors has fallen by 6% following a cautious outlook statement. Over on the foreign exchange markets, well, the pound is off 1/3 against the dollar, unchanged against the euro. Single currency likewise off 1/3 or so, 1% against the greenback. Having rallied this morning, the oil price is now drifting again. A barrel of Brent crude will currently set you back $87.94 a barrel. That's off 0.5%. Well, joining me this afternoon is Janet Murray. She's head of market analysis at RBC Brewin Dolphin. Janet, good to see you this afternoon. Let's start with Eli Lilly, because this is a huge company and a very good set of figures.
Hi, Ian. Thanks for having me. Yes, investors have been focusing on the sales guidance, and the results were good. They have upgraded their 2024 outlook, and also the EPS actually beat a consensus estimate. And the thing is, these weight loss drugs are the key growth drivers for Eli Lilly, and they have Mounjaro, which is the key one, and then they have the Zepbound, which was only started to be available last December. And already there is a huge shortage because there's so much demand. And Eli Lilly continue to guide that there will be this misbalance between supply and demand. And they're doing a lot and whatever they can to increase production. So I think for this company, it is really the matter is a problem of supply. There's just not enough, and they have to ramp it up in order to deliver better earnings. But I think investors are very happy with the results overall.
Yeah, I mean, worth pointing out, over the reporting season so far for Q1, I mean, 80% of S&P companies have beaten expectations. I mean, that points to a US economy absolutely firing on all cylinders.
Yeah, absolutely. So you mentioned the 80% beat. Actually, this is quite in line with the historical averages. But of course, it is still very well received given that we have been in such a high interest rate environment. So it is a testimony that the US companies are doing well, and the consumers are still spending, which is great. And I mean, we have seen recent data, for example, the consumer spending, it has been pretty strong still. So I think this is a very important supportive factor for this corporate earnings season going forward.
Now we hear from Amazon after the bell tonight. What are you looking out for?
Yeah, so I think analysts will be looking at their Amazon Web Service, the revenue and demand, particularly with a focus on AI, whether there's increase in demand from that. And also, it will be interesting to see the advertising revenue, because they started to have ads in the Prime Video from January this year. And of course, people will looking at the e-commerce business as well. And as I said, the consumers are still spending. If you look at the credit card data, the online spending is still very strong. But I think analysts will be looking for a validation in the data. And of course, there has been cost-cutting efforts and initiative. Again, that would be maybe a potential improvement in the margins as well.
Now, closer to home, we heard from HSBC this morning. Very, very resilient set of numbers indeed. I mean, again, it does most of its business in Hong Kong and China, of course. What does it tell us about those economies?
Yeah, I think the economic situation has improved. So obviously there are still challenges, particularly in the real estate sector. But I think the charge-off in that commercial real estate in China is not as bad as people anticipated. And of course, when the Chinese economy reopened, when the border opened in 2023, the businesses start to come in from China to Hong Kong, and that is very important for its wealth management and insurance business. So I think that is a big growth driver there, but there are also challenges. I think the mortgage growth in Hong Kong is still very, very weak because of a lot of people left the place, and I think high interest rates also is a problem.
Yeah, mind you, HSBC have seen these cycles come and go over the centuries, haven't they, in that part of the world? Were you surprised to see Noel Quinn stepping down? It seems to have taken the market a bit by surprise.
Well, I think it is a surprise, obviously, to markets. He has been in the seat for 5 years. I think what the market is pleased to see is that at least that there is a plan, in place to find the successor, and that could be internal or external candidate. But I think the plan seems to be a continuity that probably wouldn't be a huge change going forward despite the change in the CEO. I think that is what the market is pleased to see. Yeah,
such a difficult job, isn't it? Because you've not only got to keep shareholders satisfied, but you've also got to manage relations with the authorities in Beijing. I mean, it's a more political role than most CEOs' roles in the FTSE 100.
Yeah, indeed, because as you mentioned, it derives so much of its revenue in Asia, particularly in Hong Kong and China, which will naturally attract a lot of political tension. And so I think it is indeed a very difficult job, but it's good that at least Noel Quinn has agreed to stay for as long as it takes to find the successor. So there's this continuity in place.
Yeah, they normally recruit from within. Is that what you'd expect this time around?
It is difficult to say. Nobody knows. But I think that there are a number of internal candidates that could be up for consideration, notably the CFO, which has been in the bank for 2 decades. It has a history of getting the internal candidates, but we just never know. It is going to be a global search.
All right, Janet, got to leave it there. Good to see you this afternoon. Thank you. That's it from me. I'm back again with Business Live tomorrow morning at 11:30. Hope very much to see you then. In the meantime, do stay tuned. Up next, it's Mark Austin with the News Hour. Thanks for joining me today. Cheerio. Sorry, that was a bit...